Hi, this is attorney David P. Greenberger of 1031 Exchange Advantage. Thanks for learning a little bit more about the reverse exchange process. In order to do so, here are some FAQs that we often get from clients that will help you get a better idea of how it all works. When I buy property as part of my reverse exchange, do I buy it in my own name? The answer to that is yes, but what is critical is that before you close on your property, you must deed the property you are selling, which is known as a relinquished property, into our holding company. And there are instructions with your documents for this. Do I wire the money to buy the property directly to my escrow or closing agent? And the answer to that is yes. It goes directly to the closing agent as though you were buying any other piece of property. Will the public records be changed? In other words, will we record this deed? The answer is no. Nothing will change on the public records. We're just holding title to the sale or relinquished property to satisfy the IRS requirements, but we're not recording the deed or changing anything on the public records. At the end of the exchange, we will cancel the deed. As I say, it's only for IRS purposes. How will I be protected during the exchange? Couple of different ways. We will sign a note in your favor, and of course our E&O coverage and fidelity bonding is in place. But remember, because the deed is not recorded, there is little risk on your part. When the property I intend to sell, the relinquished property, closes, will I be reimbursed for the monies I laid out to purchase the property that I am buying? Yes, right after you contact us to let us know you are selling, you will then sign exchange documents before the sale and instructions to us after the sale so we can send you the proceeds to your personal bank account. All of the money that comes from your sale will be returned to you. But if the amount of money is greater than the amount you initially invested in your purchase, then you need to do an adjustment so that you wind up with the same amount of money in your purchase as came out of your sale. And so often this involves paying down the loan that you used to purchase the property so that you're able to get all of the money into the purchase that came out of your sale. If the property I sell is more expensive than what I buy, I know I will pay a prorated tax. Is there a way to avoid this? Yes. You will be taxed if the price of the sale property is more than the buy property. So to avoid this, you can set up a new standard exchange that begins immediately at the end of your reverse exchange and then buy something new within 180 days. Now here's how that works. All right, so basically what you have here is the first leg of the transaction is you're buying property for $100,000 in our example as part of a reverse exchange. So that begins the reverse exchange. And you then have 180 days to sell a piece of property. In this case, it's being sold for $200,000. Now, because you're selling something for twice as much as what you bought, you don't have an even exchange. So you're going to be taxed on the difference, meaning $100,000 will be taxed because you haven't reinvested and purchased a full $200,000. And so the way that you can get away with not paying that other tax is to begin a new exchange where it's the sale of the same property for $200,000 that begins the new exchange, and you have 6 months to complete and purchase a new property for another $100,000. So in this example, you're buying for $100,000, selling for $200,000. That ends your reverse exchange. But you're then beginning a new exchange with the same sale of the $200,000 property, and you buy a $100,000 property. And so you end up with zero tax because you've, at the end of the day, purchased $200,000 worth of properties in exchange for a $200,000 property that you sold. A lot of people ask us this last question, which is, will you provide me accounting of the exchange? And the answer is yes. We will give you a ledger showing all of the transactions that occurred in your exchange or exchanges, and you should give it to your accountant, who's going to report the exchange on your tax return using Form 8824. So that's it for now. If you have any other further questions, please feel free to call us, or you can always schedule a consultation online at www.my1031place.com. From the top nav bar, you'll see the consult button. Click on that, pick a time and a day that's good for you, and we'll give you a call.